Kia ora, you can go ahead. We love.
Kia ora koutou,
Yep, we love
everyone. Welcome to our audit and risk meeting for September, only just. And a special welcome to anyone who is live streaming today. I'd like to open the meeting with a karakia. Kia inoi tatou. Whakataka te ho ki te uru. Whakataka te ho ki te tonga. Kia ma kinakina ki uta. Kia ma taratara ki tai. Ehi aki ana te atakura. He tio, he huka, he hohu. Tihi moriora, tihi moriora. Okay, so we will start with housekeeping, which we don't need to do. There's no one in the public gallery, is there?
No.
No. So hopefully you're all sitting comfortably in your remoteness. We will go to item 2, which is apologies. We have an apology from Councillor and Chair of this committee, Colin Kitchen. If I could have a mover and seconder, please. Thank you. Moved Joss, seconded.
Yep.
Not up here.
Amy, thank you. All those in favour?
It's not.
Aye.
It's not showing.
Or is there an issue?
Just the chief executive. We're trying to get the chief executive into the meeting.
Right.
We've just got some technical difficulties at the moment.
Goodness, how did I not get Matthew? Malcolm not there.
Malcolm's going to come in now. He's going to join us in the room.
Oh, okay. Kia ora, Malcolm.
Apologies, Chair. Sorry about that.
It's okay. So we're just up to item 3, which is declarations of conflicts of interest, which we'll take as we go, unless there's some right now that people would like to declare. No, okay, we'll move on to item 4, confirmation of minutes. So 4.1, confirmation of the minutes. Could I have a mover and seconder, please?
Yep.
Thank you, Joss. Seconded. Rick, was that?
Aye.
Yeah.
Yes. Thanks.
Are there any matters arising from the minutes? Sorry. Is there a there's no action sheet this time, is there? So do we want to go through those actions now? There were 3.
Chair, I can comment on those actions if you like.
Yeah, there was just the one on internal audit update, and the one underneath that was, yes, thank you, Bruce.
So the annual audit report is on today's agenda, so that action's completed. We did set up the 1-hour workshop with council for the top 20 risks, so that action's been completed. And there's a further action which was relating to the audit report on Far North District Council rate collection, and Peter Gulliver did send a letter to OAG regarding the findings on behalf of the NRC, so that's been completed. And we've also been in contact with Far North District Council about their report on progress with implementing the audit recommendations, and I received a report from them just after the close of this agenda. So I'm going to put that report from them on our next Audit and Risk Committee agenda.
Great. Oh, that's good that they replied. Awesome. Is that why there was no action sheet? Because those had all been completed, or?
I don't know why there wasn't an action sheet. Perhaps it was just because we had only had those 4 or 5 actions.
Okay. All right. So no questions on the minutes from last meeting? No. All those in favour? Anyone against? I should probably just ask anyone against. Carried. Okay, so we will move on to item 5.1. Is that correct? HR audit results. Yeah, I thought this was quite interesting. So move and seconder. Yeah, Amy moved, seconded. Rick, thank you.
Yep.
Open for discussion. Rick, is that your hand up?
That's all right. I'm just trying to bring it up. So, all right, now I've got nothing to say. Thanks. I'm right. 5.1.
I guess the first thing to say is congratulations on the last 2 bullet points for the job well done. Really good to see from an independent making those comments. I guess the only question for me was on the first item, which said significant additional organisation work to be done. So I know that this is a hard issue to tackle and that it was no surprise. Are there any comments from staff to enlarge on what we're doing there? Or is it that paragraph enough?
It is obviously an area that we're still working on. We're looking at ways of what we can actually stop doing, working with our managers so that they actually have conversations with staff so that they can work through any pressure points or just look at what they're doing, prioritise what they're doing. Recently, I've just had some more anecdotal information provided to me in regards to the open plan office situation is also contributing to stress. And I know that Phil is working on looking at the office environment and how that can actually be improved. And we might actually have a trial run in a certain area to see whether that can be improved before putting it throughout the rest of the organisation. Kelsey, our health and safety advisor, is also looking at doing a stress survey late November just to see whether we can actually pinpoint any additional areas that we need to work on. So we recognise that there is an issue and we are trying to address it the best we can. In terms of resources, it's up to the manager to discuss if there are any additional resources required, and therefore taking that back to group managers to discuss as well.
Yeah. Thanks, Judy. So will we have this type of independent audit again? And if so, when?
We would do. As to timing, I would need to discuss that with Bruce.
It's currently not on the 3-year audit program because we've just completed this one round, but it's something that we need to discuss and confirm whether or not we do a further audit in, say, another 12 or 18 months, but it's currently not on the 3-year program.
Okay. Right. Yeah, interesting. Okay. So I just noticed that there's no specific risk report anywhere in this agenda. Is that correct? And so I'm wondering why that is.
Correct. We're bringing the risk report to the next meeting.
Oh, okay.
So I think we covered that in the last meeting. So we're doing that on a 6-monthly basis.
All right. Okay. Any further comments? Danny?
Yeah, Chair, it's probably more how the external report is provided to the committee. I prefer to have seen the full report. to actually gauge the comments and feedback from the consultant and recommendations made. And it's probably more utility value for the committee, so you can actually see which of those recommendations are important and which are less important in terms of priority. And I don't know, even so it's presented to you. I read those recommendations and I didn't know which one was more important than the others, and just the way it was presented. So I guess a suggestion, Bruce, to you and your team is maybe even taking a leaf out of what Peter has presented and the format of how you present those findings back to the committee, so its utility value to the committee is higher, and that you can actually see what actions are also going to be taken and the timeliness of those actions, so you can at least track them. I also think it'd be useful to have that work program, the annual work program, just as a point of reference, so the committee can see where we're tracking against the audit schedule, whether it be internal or external. So it's probably more suggestions for improvement than anything as a criticism. It's more just use of that information for the committee, so you can see it as we track.
Thanks, Danny. Appreciate that feedback.
So is it possible for us to have that fuller report? Is it in a form, or would you be comfortable with doing that, Bruce?
Yep, we can circulate that to the committee members. That's not a problem.
Okay. And take the other comments from Danny on board perhaps as well. Rick?
Well, I was just interested in the open planning. I obviously missed something there. So so there is a bit of what's the way to put it? Are people not happy about going into open plan, or they're a bit nervous, or they've tried it and don't like it, or they don't do it at all? I'm just interested because, you know, I go back to that conference, Penny, when we met with the CEO of Hamilton, and he said they've just gone into a complete their brand new building. Nobody has an office, including him, and they all just move around. And so I just wondered what the thoughts and comments were from the staff, because it is quite a big change and it's quite a mix, and I can imagine that would be quite stressful as well. So that's all I wanted to just ask Beryl about, those comments, those thoughts. That's all.
Most of it, well, we currently work in the majority in an open plan environment. It's mainly around the noise and being able to concentrate. A number of our staff do actually have earmuffs to get some quiet, but let's look at ways that we can actually try and improve that situation. For some people, especially when they're trying to concentrate, actually need that peace and quiet versus
yeah, totally agree. Okay, thank you.
Thanks, Rick. Cutting off a bit here, it's a bit different. The hot desking is a bit different to what we've got. Hot desking is that you can have those quieter places if you need. It's quite a different model to what we've got.
Yeah, plus we also obviously are encouraging the flexible working, so that if they are able to, they can actually work at home where it's probably a quieter environment. So we've got the various options that we can explore.
Yeah. Amy, you had a question, and then Joss.
Thank you. Yeah, just appreciate the report, and would really like to read the full report. Seems like a really valuable piece of work. And I think, yeah, just probably building a little bit on what Danny was saying, interested to see how the actions can be maybe a little bit more clear, and sort of what will be done by when, and presumably you have all of that sorted in your end, but just making sure there's a way to kind of track progress and see areas where we're finding it harder than others to make progress. But yeah, just want to emphasize that sounds like there was some really good feedback, as well as some good clarity around places that we need to do some more work. So thank you.
So were the recommendations and actions put in priority order at all, or were they just as they fell?
Just as they found them. They weren't put in any particular priority.
Okay, thank you. Joss.
Thanks, Chair. Councillor McDonald actually took largely right out of my mouth the comment around the structure of the report and the information itself and the trackability of the actions would be really useful. My only other specific question was actually a little bit of an expansion, if you can please, on the multicultural aspect and what is happening in that area, given the scale of nationalities that we have across the organisation. It would be very interesting to have a little bit more expansion than what is in the action, just to understand how that is going to be rolled out.
Excuse me, with that one, I'm working with Oriel on what we can do in that respect. We haven't had a lot of discussions in regards to culture outside of Maori, because we are actually quite a diverse organisation with a very multicultural. So I know that's still an area that we've got to explore a little bit further, and how we can actually pull those people in to get their viewpoint. At the moment, though, I am tending to concentrate on the diversity for Maori and bringing them into the conversations, and that's a piece of work that I'm doing with Oriel. It's still very much in the planning stage in regards to recruitment, induction, looking at policy. It's quite a large piece of work, so we're still in the planning process of that.
Thanks for the update. I suppose for me that is a really good example then of how, because that multicultural nature of the organisation is one that can impact quite considerably the whole culture of an organisation, because different people from different backgrounds come at things with very different views and ways of doing things. So it can actually impact the entire culture of an organisation. And so for me, it was a good example of the recommendations and actions that are in there that would be very useful to see over a period of time, 6 months, 12 months, etc., as to how that's being embedded across the organisation because of the potential for that impact. And as we are employing more and more staff, it's one of those ones that obviously I would say is going to become more and more multicultural as we go along, just looking at the nature of, you know, who we are needing to reach out to employ. So I just thought that was quite a useful example of how it would be good to be able to track these things through. So yeah, thank you for that, Beryl.
Thanks, Joss. So I don't know, does this relate to our risk register or any of these, or are they sit sort of underneath the governance part of the risk register?
No, some of these definitely do relate to our risk register. I mean, the stress is currently quite high in our risk register. And I think that's probably the most pertinent one of these recommendations in relation to our risk register. I guess there's a bit of crossover as well in some of the others in terms of bullying and harassment, which is currently listed quite as one of the top risks potentially within our health and safety risks as well. So there is quite a crossover between some of these recommendations and the risks that we have. Yeah,
so we will hear about them progressively as we get risk reports. I was interested in your comments, Joss, about multicultural. I'm just reading a book at the moment, sorry to take up a bit of time, but it talks about hot and cold climate people, and there's quite different ways that people react to being asked to do something depending on whether they come from a hot climate, where they'll automatically say yes even if they don't want to. It's just their culture says if someone asks them to do something they will do it, whereas in a cold climate, which is more typically Kiwi, although I think we're quite a mix, they will be a lot more direct and say, well, no, actually, I'm sorry, I'm too busy. So yeah, interesting. Okay, so I think we're done with that. All those in favour of accepting the report? Thank you, Amy. Anyone against? Okay, so we'll move on now to item 5.2, which is 2021 annual report and Deloitte audit report. Bruce, did you want to kick this one off before we go to Peter? Or Annabelle, I see you're online. Are you NRC or Deloitte?
Oh, sorry, Penny. Kendra is an audit manager as part of the Deloitte team.
Okay, thought so.
Yep.
Good. So yes, who is going to lead this, please?
Chair, I'd be happy to hand over to Peter, and also I think it'll be quite good for Stuart to have an opportunity to comment as well, because there is a report from Stuart which is attached to the agenda item as well. But if I could hand over initially to Peter, that would be quite good. Thank you.
Okay, I'll just get a mover and seconder for the 2 recommendations. If that's
I'll move that.
Thanks, Rick. Seconder, Amy. Thank you. Sorry, Peter. Over to you.
Thank you. Kia ora, everybody. I'm going to try and attempt to share my screen, so we'll see how that goes initially, and if that doesn't work, we'll revert to plan B. So if people could just let me know if you can see the document, which is our report. I see Amy nodding, that's a good sign. Excellent. Okay, so I'm just sitting on page 5 of our report here, which essentially just provides a status update for the committee. So you can see from this that we're at the point where we have only our normal closing procedures left in order to finalise and confirm the audit. So that is essentially the council approving and signing the annual report, which will occur at the back end of October. There's a representation letter from council and management back to us, which is just a normal sort of audit procedure. That'll be signed at the same time as the annual report. And then we undertake some subsequent events inquiries covering the period from 30 June being balance date up to the date the annual report is in fact signed. So we'll undertake those particular procedures closer to the time. So other than that, and other than I guess the discussion we'll have today on this report, our audit is completed, which I think is a really good effort by the collective teams. And I'd just like to, at this point, acknowledge the work of Bruce and Simon and the team for enabling us to be at this point today, bearing in mind that all of this work was done virtually due to the Auckland lockdowns. Well, also there was a lockdown in Northland at the same time for part of the period. So just moving through to page 6. So this is the dashboard which covers our areas of focus. So this is similar to what I presented. I think it was at the June subcommittee meeting, which was our planning document. And I signalled at that time that these were the areas that we were going to put, I guess, the most audit focus on. It's not to say that all of the other areas aren't important, but from our perspective, due to either the importance of these items from the perspective of the financial statements or the level of judgment involved, which you can see sort of highlighted in the 4th column, where we think those areas of judgment lie. These were the areas that we set out during the planning report, and I'm now going to come back and conclude on these for you. So that you've seen that before. The next few pages is the detailed comments, and look, I'm not going to go through this sort of line by line as it were, and I'm very happy to take questions, so please just jump in if there's questions on each of these matters as we go through. But look, the first item where we consider there to be a reasonable amount of judgment, and also it's an important element of the balance sheet, is the valuation approach to a number of the different underlying assets. So council has infrastructure assets, land and building assets, investment property assets, emissions trading units, and forestry assets, all which are held at fair value. So they're all revalued, if you like, to a fair value at 30 June. And those revaluations do require some judgment around an appropriate valuation methodology in the first instance, and then appropriate valuation assumptions in the second instance. So that's where we spend our time. Is looking at those methodologies and assumptions, including some interactions with the third-party valuation experts who provide this information for council. Couple of call-outs here. There are significant revaluation gains that have been recognised in the FY21 year, which you'll see flowing through your P&L. Most of that relates to 2 items: one, investment property, and then secondly, investment property which you're holding for sale, which is essentially the Kensington property and a couple of others. The majority of the gain on the property which is held for sale, Kensington, is going to be realised in October when that property settles. And look, this is I guess an element of the accounts which we've spoken about over the last couple of years, as we've commented that we felt that the Kensington property valuation had been essentially held back, I guess, by the valuers due to their conservatism and effectively not giving council credit for the development until the valuers saw certainty around leasing outcomes. Now that conservatism is effectively all being unwound in this financial year, which is why we're seeing a large gain on that property flowing through these accounts. So that's sort of the first call out. The second call out is in relation to a development that's occurring in Kaipara with the Kaipara Service Centre in Dargaville. There's actually a $3 million decrease in value associated with that property. So the valuers have taken an approach here where they valued that property as if it were completed, and then they've deducted off the costs to complete that development. And essentially, that's provided a value of just over $1 million, so just short of 1.1 million. Now the capital expenditure, if you like, on that property during the year has been sort of closer to 4 million. And so the outcome here is that that capital expenditure has essentially been written off, if you like, through that valuation adjustment. So again, similar to Kensington, the valuers are not at this stage providing any credit for you on this development. I think the circumstances here are different with Kensington. Over the last couple of years, it was more about leasing outcomes. This property, of course, will have a tenant, being the Kaipara District Council, but it's also going to be owner occupied by council as well. So I think the view the valuers are taking here is that it's a development that you're doing that's not going to necessarily stack up from a commercial perspective, because that's not essentially the purpose for that development. So I guess just noting that there is a bit of a valuation, a downwards valuation adjustment in relation to that matter. And then the final call out here on this page is that the flood protection or infrastructure assets, which I noted, are on a cyclical revaluation approach. So every 3 years these are looked at, but in the in-between years, of which 2021 is an in-between year, management does ask Aon to just provide a desktop review as to whether there's been any material movement in the valuation of those assets in their view. And the answer that came back on that was there was potentially up to $500,000 increase in value on those assets, but because that wasn't seen as being a material number relative to the valuation of all of these assets and the balance sheet of NRC taken as a whole, no further work or adjustment was made. So I might just pause there and see if there's any questions on this topic.
I can't see people, sorry, but so Peter, just a quick one from me on climate change. As we get more and more accurate information, do you see that affecting our asset valuations? Is it going down, especially on our flood assets, say?
Yeah, that's a tough question, Penny. I would say with the flood protection assets, possibly not, unless they suffer, any sort of damage due to a climate event, like a storm, a flooding event, that type of matter. Depending on the timing of that, you might see valuation adjustments down at year end, but the way those assets are valued is effectively the valuers calculate the replacement costs. So if they had to go ahead and start from scratch and reconstruct those assets, what would it cost? And in an environment where those costs keep increasing, then what tends to happen is the underlying values of those assets increase. So I would only see those assets coming under stress from a valuation point of view if they were damaged in any way. And then, of course, you'd need to go through and do a remediation exercise. Possibly the area of higher risk might be on the investment property portfolio. And again, it'll depend on where individual properties are located. But to the extent you've got any in flood zones, coastal, for example, I don't think there's too much coastal, but that could negatively impact values as valuers start to take the climate change matter into consideration. I think you'll get a signal even before valuations move, in my view, which will be an insurance signal. And I think if you did have properties that were, potentially under stress from a climate change perspective, you might find them difficult to insure, or in fact premiums would start to rise quite materially. So I think that'll be the first flag that went up in relation to that, Penny.
Questions? Got Joss and then Rick.
Yeah, really basic question, but I want to ask it anyway. So are there inherent, and you've just touched on it around the risks in terms of the climate change evaluations, are there risks inherent in the valuation approach that we are taking? And do you see that these risks are being managed? And is there another way in which we could be approaching this area of the organisation in terms of our valuations? This is coming from a very simple, looking at the overarching kind of approach that is taken here, and my not knowing whether there's another way of doing it and a better way of doing it, and that's why I'm asking the question.
Thanks, Joss. Good question. And the answer to that is you are undertaking these valuations in exactly the way that's prescribed by the financial reporting standards. You know, in each case, you're using third-party experts who in turn go away and you know, take certain data points and assumptions. So if I just quickly run through them. So the infrastructure assets I've mentioned, that's like a cost to complete type methodology. So your third-party valuers are looking at construction costs, materials costs, that type of thing, and then building that up into an overall valuation of the assets. The land and buildings and investment properties tend to be valued on the basis of what is the sort of the rent, the market rent that could be applied to those properties, and then multiplying that out by something that's called a capitalisation rate or a yield, which is essentially the rate of return that the market would expect for that type of property. And what we're seeing in terms of the increases come through in those areas this year is that those market rates of return have dropped. Now, part of the reason for that is that last year we had quite a lot of uncertainty at this time in relation to COVID. I think the market's more comfortable with that now, and also sort of decreasing interest rates, you know, decreases the rate of return, which has the result of impacting or higher valuations coming through. So again, the valuers are using third-party data in the sense of their knowledge of property sales around the district to kind of inform them on that basis. The emissions trading units, that's a smaller number. That's essentially an exchange, a bit like a stock exchange, if you like, for trading in those particular items. So that's a relatively easy one to value. And the forestry assets, again, third-party valuer used, and this is really a valuation which is done on what we'd call a discounted cash flow. So they estimate the cash flows coming in from harvesting the forest, subtract off the cash flows that are required to do that work, transport those logs, apply again a rate of return assumption, and the answer is the valuation that you get. So perhaps a long way of saying that you are applying absolutely the right valuation approach for each asset, and you're involving the right experts in our opinion as well.
Thank you. Okay, we've got Rick, and then I see Malcolm's hand up.
All right. So thanks, Peter. Look, I'm reading it off the screen, so I don't dare go out of it in case I lose it. But so it's a bit small. But just in terms of the Kitebrah Centre, so the valuer is assuming that is under the assumption that we're going to keep the building. Would it make any difference if we decided to sell that building? Would, you know, if that was, they're assuming because we're a tenant that we're staying there, but obviously everything's up for sale. So would that is that likely to affect it at all? I've got the as is, where is basis. I can't quite read the rest, but is that likely to, you know, if we had a different approach to the property, would it make any difference to the valuation? That's what I'm trying to find out, or affect us at all.
I don't think it would, Rick, on the basis that it's early days, or relatively early days in terms of this development. So if you were to, and again, if that was the case, if you were going to go down a sale type track, I expect the valuers would take a pretty similar approach to what they did with Kensington. So they'd want to see what the lease terms were. They'd want to see potentially a buyer in the market, which is effectively what they needed for Kensington in order for them to feel comfortable with, reversing some of the negative valuation impacts from previous years. So I think.
I guess my point is that it is fully tenanted. Well, it will be fully tenanted. So it's actually quite an attractive building to purchase. So, you know, I just wondered if that would affect it at all. That's all.
Yeah, look,
Because,
what
you know,
the-
unlike Kensington, which wasn't fully tenanted, this one is fully tenanted and the you know, very good leases. So that to me would seem to imply that would affect the valuation of the property. That's all.
Yeah, what they're saying there, Rick, is that the rent income from those leases, when you apply I guess a market rate for property in that part of the district, doesn't really stack up. That's their basic conclusion, I feel. So what they're saying is you'd need higher rents in order to justify a higher valuation.
Okay, thank you. Thanks for that.
Thanks, Peter. Malcolm.
So, Chair, and it's a little while since I've looked at this. Just a couple of things. Firstly, as Peter said, there are very strict criteria and rules around valuation methodology. And what I would suggest is that we actually invite the valuers in to come and explain to us how they anticipate those rules changing to allow for climate change. Because as far as I'm aware, when I looked at this last, which is a little while ago, there was no provision for climate change in those rules. So that's quite an interesting area of development that I think is worth us talking to the, you know, having them come in and do a presentation on. In terms of Rick's question, and again, my information may be a bit dated, but it always used to be that there was quite a different standard for valuing investment properties to owner-occupied properties. Strangely enough, you seem to come out with sort of the same number at the end, regardless of which method you use. But there are quite different standards for the two. Yeah, I mean, I haven't sat down with the valuers to discuss this 4 million write-off, but I suspect it'll all just roll back and wrap up as soon as, you know, and we'll see the same bump next year or this current financial year when we bring this property into use. You know, with this being with a shortfall being reversed. I think in terms of the capitalisation rate, we know that the rental income is well above the market in Dargaville because it's a new facility. But from a cap rate perspective, because we essentially supporting KBC in that, we also set a very much lower cap rate than what the market in Dargaville has. So you'd expect the cap rate in Dargaville to be around the 9% mark, 9 or 10%, whereas we've got a 6% cap rate on this building. So all of those are factors that would have influenced the valuer going forward. But we really need to just follow that through with them at the end once the project completed.
Thanks, Malcolm. Okay, we'll carry on. Thanks, Peter.
Thank you, Penny. So just moving to the next area of focus. So look, this is a really important part of NRC's balance sheet, which is the investment asset portfolio. And look, there's a number of different things we do here. It's actually an inherently difficult part of the asset base to audit, in the sense that at first blush, you'd think you're getting a confirmation of value from the investment managers would be an adequate procedure. And of course, that is one of the things we do. However, it is very difficult, if not impossible in many cases, to actually drill down into that valuation to look at the underlying individual assets that make up each of those portfolios. We're not able to get that information through the fund managers. So because of that, we do undertake a number of other procedures. I guess ultimately what we're concerned about is that there would be a David Ross type scenario, if you're familiar with that issue, where an investment fund was being run, but there was nothing sort of sitting in behind it, as it were. And so confirmations from that party actually weren't worth the paper they were written on. So to sort of mitigate against that risk, and of course, you are using very reputable fund managers, and you have an advisor, which is all part of the important sort of governance aspects around this as well. But we also undertake a number of other things ourselves just to try and mitigate those type of risks. So we're looking at whether those funds are in fact part of an audited set of financial statements from the fund manager. And whilst the timing can be off because some of their balance dates don't line up with yours and some of the audits haven't yet been completed, but we can see looking back in time that in each and every case, those funds are part of a third-party audited set of financial statements. So that provides us with a sort of an additional layer of comfort, if you like. And we also look at obtain internal controls reports. So many of these fund managers and custodians have a third-party firm like Deloitte, like PwC, one of the bigger sort of audit firms, if you like, come in and undertake a review, a very detailed review of their internal control environment, and they produce a report for that fund manager, which is then made available to the customers and in fact other auditors such as ourselves. So we go through all of those reports for each of the fund managers and really just looking for any red flags in terms of the underlying control environment. And again, the fact that work's done is effectively another layer of protection, if you like, for these assets. So we've completed all of that work. Look, there are a couple of minor bits and pieces which will still need to flow through in terms of capturing all of that information. We've got over 90% of it, but the rest will come through well before we sign the accounts. So we're not worried about any gaps in the information at this point. And then we also check as a final step whether the SIPO document, which you've set out as being, I guess, the benchmarks around allocation of assets is being followed. And of course, you will see reports from your advisor on that on, I think, a quarterly basis as well. So it just, I guess, is a summary of the things we do in this important area.
Okay, thanks, Peter. There's no hands up that I can see, so we can carry on.
Okay, very good.
Sorry, hang on a sec. Stuart.
Yeah, sorry. I just to confirm, that was one of the conversations that I had with Peter, was really about that validation and the validation process around our funds under management. But I think, Peter, you mentioned to me that all but one of the funds were providing that clarity of audit process.
That's right, Stuart. The only, and it's not a material amount held in that particular fund, but I think it's Direct Capital is the only one that doesn't have a third-party controls report. Their fund is part of an audited set of accounts, but they don't have that extra step, which is the internal control report. I guess, our advice, if you were to ask us on that, would be, look, if you had material amounts of money invested in any particular fund manager, then those internal control reports should be something you're looking for. So essentially putting pressure on the fund manager to actually have that work done, I think would be a sensible option. But look, in this case, we haven't really raised that as a red flag because the amount invested through that manager at this point isn't a large amount in the context of the overall investment.
Thank you.
Thanks, Stuart. So just moving through validity of fees and charges revenue. So look, this part of the audit is really looking at, I guess, the timing of recognition of revenue with respect to fees and charges. And we don't have anything to feed through a report on that in the sense that there were no errors or misstatements that we found. But we are just raising one matter for your consideration here, and it's actually in relation to grants revenue. But on the balance sheet at year end, you do have an amount due or a debtor from the Ministry for the Environment in relation to a couple of individual projects. And MFE hadn't paid those amounts and they were getting a little aged, if you like, or dated. And the reason for that was because they were seeking some more information from Council in terms of reconciling the underlying information to support the claim. So look, a week or so ago, we had this conversation with Bruce and Simon. From council's perspective, the underlying reconciliations were very much at the final stages. And in fact, one of the amounts has been subsequently confirmed by the Ministry for the Environment since we had that conversation. So that's really an update to what's written in the document here. But as far as I'm aware, the other one is still sort of work in progress. So again, it's not that there's any real particular risk here. It's just that there's a process that needs to be undertaken in the background to validate the amount that's owing from MFE.
Thank you. I see Bruce has got his hand up.
Yeah, thanks, Chair. Just if I can comment on that. We have now received the full payment for the June Lakes project. So that was about $150,000.
Yep. And
there was a $4 discrepancy between us and MFE. And on respect to the other project, Waitai Waiora, the team has compiled the documentation to provide to MFE to receive payment. MFE have indicated that once they receive that documentation, then they will make payment. So the team has collated 99% of that documentation, and they will submit that tomorrow.
That's great. Thank you, Bruce.
Thanks, Bruce. That's helpful. Look, the next item here, this is where we consider whether management, I guess, given their seniority in the organisation and perhaps their ability to override segregation of duties and other important controls, have in fact undertaken any of those activities. The main thing we look at here is analysing journal entries, which would be one way in which management could seek to to effectively override those controls. So again, nothing to report here to you in relation to the work that we've done in that area, but just wanted to highlight that as something that we do as part of the audit. Again, moving through, we've spoken about this one at length in the past. This is the importance of complying with the relevant legislation when setting rates revenue. There's been some challenges in this district in the past, although not for a few years now. One of the important things you do here is you use Simpson Grierson with their legal expertise to look at all of your rating documentation, prior to it being confirmed by council, and that's a really important control which we would encourage you to keep up with. And again, just for completeness, while we are auditing the FY21 year, rates were obviously set back in June 2020. We have actually also undertaken work on the FY22 rate strike, so for the current financial year as part of the LTP process. So again, if you can remember the report that we put through for the LTP, we didn't have any concerns or issues in this area for either 2022 or 2021. And then look, the next sections, I'll skip through these pretty quickly. These are some areas of the audit which are, I guess, specific to auditing in the public sector. And this is where we're really fulfilling some responsibilities on behalf of the OAG with respect to, firstly, performance, waste and probity. So this is considering whether the expenditure is in fact appropriate for a public organisation, given it's public money. So we're looking at categories of what we'd consider to be more sensitive expenditure here. So things such as expense claims, things such as learning and development type expenditure, potentially where people have had to travel and the like. Looking at credit card statements, we consider particularly the chief executive's expense claims, and also the chair is again a requirement from the OAG. So after completing all of that work, considering the different policy settings that you've got, we didn't find any areas of concern or anything to report here. Likewise, with the processes around managing conflicts of interest and related party transactions, no concerns from our perspective based on the work we've done. The financial prudence disclosures which are included in the annual report, again, likewise, we're comfortable that all of those are accurate and appropriate. Fraud, so again, I think we talked about this at the last meeting. We undertake a number of different inquiries, and thanks to the councillors who have responded back to us on that. So that's something that we do at council level, also at a management level. And again, an important additional piece of work that council is undertaking in this area is they've engaged some specialist forensic resource to come in and undertake some specific testing in this area. So as I understand it, that work's due to kick off in the next week or two. So no doubt you'll see a report through from Deloitte in due course on that topic. Legislative compliance we've talked to, and then skipping to the next page, internal control. So look, a couple of really minor findings here in relation to appropriately recording GST on a couple of items, and then there's a couple of the non-financial performance measures where we thought there could be some minor improvements here as well. So really nothing for council to be concerned about, more for management to pick up just in the fullness of time. This is an important page. So from our perspective, we don't have any unadjusted items either impacting the quantitative amounts in the financial statements or the disclosures either. So effectively it's a clean audit from that perspective. And then finally, just some sort of final reporting matters. So this page just summarises the audit fees which have been agreed and any other assurance or other projects that we've undertaken for council. So again, just for completeness, skipping through this. So the first couple of items relate to the audit. The next item is there's a couple of bits of work we perform to help you comply with the requirements of the debenture trust deed, which relates to the borrowings from the LGFA. There's some agreed procedures for one of the projects which we just talked about actually, which is completed in order to assist you to comply with the requirements of MFE. Obviously the long-term plan audit occurred this year. That's more of a one-off or once every 3 years. There was the review of the rating processes and controls at Far North District Council, which was referenced earlier in the meeting. And then there was the counter fraud analysis, which again has been referenced earlier in the discussion. And then these final matters are really just here for completeness. Probably the only call out here is that there has been a minor change in accounting policy with respect to the way you account for your investment in regional software holdings, which is the council controlled organisation which provides software to a number of different regional councils throughout the country. Northern Regional Council has a 16.75% share, and effectively you've now aligned the way that you treat that in the group financial statements and the council financial statements. So again, not a big deal. Hasn't had a major impact on the accounts. Although we do note this year there has been a small impairment recognised against that investment based on your view of when that software will come to end of life. So Penny, that was all of the comments I had on our report. Thank you.
Thank you. So I'm just looking for any hands up, but I'm not seeing any. I guess my only comment is just for completeness on that fees and charges grant money. Just that, you know, that the staff found it and dealt with it, and I'm assuming that there's processes in place so that it won't happen again, or that any comments from staff?
Correct, Chair. I think that one there was unfortunately a factor of both MFE and NRC in terms of the sheer churn of staff from both organisations in that project, which resulted in that discrepancy happening. So we do need to go through and evaluate what happened and put in place something to stop that recurring. So I'll talk to the GM that's in charge of that area and make sure that happens.
Yeah, thank you. Just wanted to close that one off. Any further comments from anyone? If not, we can move on to...
Just something quickly. I mean, just acknowledge the committee that...
You're a bit faint, Malcolm. Sorry.
Sorry, Chair. Just to acknowledge to the committee that as a result of the very rapid increase in the amount of grant funding that we received from the Crown, our systems were found a little bit wanting and weren't able to keep pace, and we are looking at dealing to that at the moment. So, you know, the report identifies that as an area of further improvement that we need to make. and there's a lot of work happening in the background, both within the enterprise system to ensure that that gets dealt with as the enterprise system comes on stream, but then also under KMR in terms of the grant funding where we issue these grants again. We're developing specific software there for the KMR project, which ultimately we're hoping will also become the standard practice for NRC as well. So that's being dealt with. I think the other thing that I should just note again with the committee, we have spoken about this before, but that the management's advice and what we're doing is writing down regional software holdings faster than the other councils are. We were the first cab off the rank in terms of using the software, and therefore we're most likely to be first cab off the rank to disestablish the software and move to the next generation of software to keep that edge that we have in terms of our delivery services there. And rightly from a regional software holdings perspective, that board is required to depreciate that software based on the average level of use of the software across all of the shareholders. So we're always going to be slightly out of step, and therefore writing the software all faster over the next 2 or 3 years than the other councils that are also shareholder members. So, you know, Peter touched on that, but that's again a very deliberate strategic decision that we've made as the management team to ensure that we essentially staying ahead of the curve in terms of being able to quality of service that we are able to deliver.
Okay, thank you, Malcolm. I see Joss has got a question, and then I'll round up the Deloitte's part of this report. Over to you, Joss.
Thanks, Chair. And firstly, it's not really a question. I don't want to steal your thunder at all, and I know you'll thank Deloitte resoundingly, but I wanted to pass on my thanks to Peter and the team as well, because I'm the only councillor who's actually had experience of the previous audit processes that's on the committee. And so I think I'm ably qualified to say that the process is a dramatic and considerable improvement on what it was in the past, and has made the lives of, I would imagine, our staff, but most definitely the councillors as well, a lot easier, and it's a lot, a much better process, let's put it that way. So thank you very much to Peter and your team, because it has made a significant difference. And just in the ease in which we are able to actually go through and see the information and understand what's in your report is actually really beneficial, not only for me as a councillor, but I think for anybody who's actually looking at NRC's finances and going through our organisation. So thank you very much from my point of view on that. My only other one was just a brief cheeky comment to Bruce and the team that maybe the comms guys might like to have another look at the annual report and the summary annual report, because my eagle eyes have spotted a number of missing apostrophes and macrons and bits and pieces. So it would be really great if the team can pick those suckers up for us. Thanks, Bruce.
Thank you, Joss. I appreciate those comments.
Yeah, thanks, Joss. And I certainly agree, Peter. It is a good read, and I like the format, not being having too much experience of the or any experience of the last auditors, but yeah, certainly concur with Joss's comments. So thank you, and thank you to our team as well. I know that you put a lot of work in to get it to Peter, so well done. So Stuart, now we can move on to your, if you'd like to talk us through your report. It's a good read, but if you have any other comments.
Danny's got his hand up.
Oh, sorry, who? Danny. Oh, sorry, Danny.
That's fine, Chair. It's probably more, Peter, for your team in terms of the scope of the next phase, I mean, in terms of the next audit. I'm interested in terms of a maturity assessment of the internal audit capability. and whether or not that would something that would fall into the scope of the next audit review.
Thanks, Danny. Yeah, certainly something we can turn our minds to for you. I'll need to just pick that up with Bruce as we head into the next cycle, but yeah, happy to have a look at what's being done in terms of the reports and provide a view back.
Can you just explain a little bit more, Danny, on what you mean?
Chair, so a maturity assessment is more about the capability of NRC and its audit capability. So I think it would be useful for the committee to understand the capability. So it's like a maturity of the organisation, where it is in terms of its maturation, I guess. So, and Peter's team would be well placed to give us that view in terms of the focus of maybe at least the scope of the next audit, just as a next iteration.
Okay. So is that, how do we progress that, or do we progress that? Malcolm, what are your thoughts?
Chair, I think it would be a matter of us just sitting down with Peter and just assessing that against the current both internal audit program, because that's where we fund any additional report from is out of that budget. So we can just look at that and just see how that can be tweaked to be able to allow Peter to do a little bit of extra work in this space. But I agree with Danny. I think it would be a good assessment for us to undertake at this point.
Thank you. So is that a large amount of work, Peter, or?
I don't think so, Penny. No, it's more, well, we'd look at the reports that are completed. We'd look at the program and the way in which you put that program together. A lot of it would be done by discussion. And then perhaps the other thing we could bring to the table is just a bit of a benchmark or comparison to what other organisations, other councils of similar size and scale were doing in this space. So like the larger councils undoubtedly will have internal audit programs either through their own internal audit function or they'll outsource it. Whereas I would imagine we'll have to validate this, but certainly in my experience, not too many councils of your size and scale actually do anything in this regard. So I think what you'll find, again, I don't want to prejudge this, but you might find that you're a little bit ahead of the pack, albeit if you were to compare what you're doing to best practice in the internal audit space, there's probably some room for improvement. But again, we'll go through and do that work and come back to you.
Okay, thank you. All right, we'll leave it there. Stuart, over to you.
Thanks, Chair. Well, I won't look. I won't go into the report that I put together. I think everybody's probably had the chance to read. It's not a long read, but really, I just wanted to focus on a couple of things, and that was that reiterating Joss's words. I thought the audit process was really, really good. The key thing that I like about Peter, Kendra and the team at Deloitte is that there's no real evidence of churn there in relationships with NRC. They've got a lot of good continuity, and that's really great because it means that you can have those, you can plan, and their relationship with management is such that they can cut to the chase without having to reinvent the wheel on a lot of things that do occur and that I've seen in the past with audits. And it's often the biggest problem that's mooted by organisations is that of audit team churn. So that's really, really great, and I thought it was a really great report and very clear and very intuitive. In terms of the NRC in itself, I was just looking at that full health check. So rather than really going through any of that, was there any comments from council and management, I guess, in relation to my overview? And please bear with me with my farming analogy. I thought I did that for the again, the reason of trying to, be a little more intuitive around what it all means.
No, it was great. Thanks, Stuart. You'd be a good mate for Marty, our councillor. He's quite good at those sorts of analogies. I just had the one question, but I think we've already covered it. And it was just in that first paragraph, I think, at the end of that, where you talked about fund managers are or should be audited.
Oh, in that sense, it was that was a very broad catch-all in relation to the audit, as well as the reporting that was brought out by internal controls reporting. So that was a bit of a broad catch-all there, without specifically talking about the internal reporting or lack of that we get from direct capital. But it was that was really a point that was to bring up with Peter, which he covered very well.
Yeah, thought so. Just wanted to check. Thank you. Any questions? Doesn't appear so. Okay, so we thank you very much for that, Stuart. It was nice, easy read, and very happy that you're happy. So we can move on to the annual report 2021. Is there any staff that are wanting to speak to this? Oh, Malcolm.
Before we move on, could I recommend to the committee that we formally minute Stuart?
Oh, I can't hear you, sorry.
Sorry, could I just recommend that we formally minute Stuart's recommendation about the auditing of the fund managers and refer that to the investment and property committee, working party, to consider as part of the SAPA process, just so that there's a formal note going from this committee, to look at that. Certainly.
So do we need to add that as a recommendation, or is it just minuted?
Yeah, Chair, I mean, I think it's important enough to be a formal recommendation of this committee for the other committee to investigate.
Okay. All right, so I'm happy to move that as a further recommendation. Do I have a seconder, please?
Yeah, I'll second.
Thank you, Rick. So do we now move that before, or just add it to and move them all at the end? Sorry, I'm not.
Oh, Chair, I think you can just add it to and move the entire paper in one with the additional recommendation.
Okay.
Yeah.
Thank you. All right. So yeah, so back to the annual report. Is there anyone that in the staff that wanted to speak to that before I go for any questions, comments? Not seeing any hands up. Okay. Are there any? Joss, you've made some of your, you've noticed some grammatical mistakes in there. Was there anyone else that wanted to comment? I've already had a good look through it several times. I'm quite happy with it. I like it. I think it's vibrant and it's informational. Very happy.
Oh, it's great. Thanks. Perfect. Thank you.
Amy?
Yeah, no, just really good and quite a satisfying read to see things that have been achieved, which is nice from my perspective. I just appreciate all the work that's gone into it. Thank you.
Yeah, and I just note I have read another couple of councils' annual reports, and they are certainly in the same boat as us in that they haven't been able to complete all their goals or targets or KPIs. So it's not unusual, and some of them we came pretty close to, and others were out of our control. So just acknowledge that, and thank everyone for the work that's gone in. I know it sounds a bit easy to say thank you, but I do acknowledge all the work that goes into these documents and making those documents possible as far as our KPIs and targets go. So I think that brings us to the end of that item. So I can move all those recommendations, including that third one, was it? Are there three, Judy? Sorry, I'm flicking between screens here. Yeah, so there's three recommendations now. Anyone not in favour?
No.
Okay.
No, in favour.
Yeah, thank you. All right, that's moved and passed. Next up is 5.3 service delivery update on page 203, which gets us a fair way along. So I'll just get there as well. Marine Safety Management System, SMS. We have three recommendations there. Could I have a mover and seconder, please?
Chair,
Yes, sorry.
could we go back to 5.3? We haven't.
Oh, service delivery update. Sorry, that's on page 203. Yeah.
And yes, I'm happy to move that recommendation, Chair.
Thank you.
I'll second.
All right. Are there any comments?
Yeah, actually, I do have just one, Chair.
Sure.
Yeah, as Chair of Planning and Regulatory Working Party, I'd actually very much like to see the Section 17A report, final report for the Planning and Policy Service. It would be very useful, and it may well be that it could be handy for that to come through to my working party to just have a look through as part of our next working party meeting.
So we can, Bruce, is that okay?
Absolutely, that's perfectly fine. We'll arrange to do that.
Thank you. Can you please put that as an action of this item 5.3?
Will do.
Thank you.
Anything else? Amy?
Can I just ask a question? Just wondering how the activities, where do they arise from? Is that a table of activities that NRC create, or are they somehow defined according to the legislation? I'm just wondering if we can get climate change somehow in as a specific activity. That's all I was thinking.
The legislation under Section 17A in Local Government Act does prescribe which activities this applies to, but it doesn't limit you from also choosing to add other activities should you wish. So if we wish to, we could add climate change, for example, and we've also added, as an example, information services and technology, which isn't a requirement under Section 17A, but we see value in doing those reviews to improve the service delivery and what we do in that area internally. So it's more a question of, I think, Chris's capacity to do the work on that schedule and the need to prioritise to actually what's most important and what we want to do. So it could be done.
Okay, and so how do we how do I get that to be something that is, well, I don't know, what do others think? How do we bring that into the mix for at least for consideration?
I'm just wondering how much overlap there is into other areas that are already on there. I'm not sure, that's just a thought that's come to mind. Malcolm or Tony? Sorry, Bruce, you're next.
I'd almost be inclined to sort of wrap up a number of these together. So if you were inclined to do climate change, and I'd also suggest that we also look at natural hazard management and to a degree the civil defence and emergency management at the same time. So you're kind of looking across those three spans, which there is some interrelationship between. So I'd suggest we put it on the same schedule as those other two items and look to do it at a similar time.
Thank you, Bruce. Tony? Oh, you're just...
No, sorry, I was just waving at somebody else.
Oh.
Sorry, I didn't actually catch the last point. What were you asking for in relation to the hazards and civil defence?
Bruce was talking.
So my question was just whether or not climate change should be an activity that gets that same review. But Bruce has just suggested that it might be better bundled, you know, with natural hazard management and CDN as well, which is fine. And I mean, yeah, it doesn't really matter to me whether it's an explicit activity or not, but just making sure, I guess, it's in the mix, because equally you could say it's a really important component of land and biodiversity and biosecurity when we're thinking about yeah, services into the future. But happy to take guidance, just bringing that up.
Mm-hmm. Okay.
I mean, climate change, and I'm not disagreeing with you, Amy, but climate change would feature, like you say, in most of these, if not all of these areas. So maybe we ask staff to go away and have a think about that, and just make sure that either climate change is incorporated, or it has its specific, or it's grouped. Would that be something you could do, Bruce?
No, that's fine, Chair. I think that's a good thing for us to go away and do.
So Chair, if I could just comment on the climate change one, and while I support doing the wraparound, because I think we're looking at that in any case within the executive leadership team. One of the core fundamentals of a 17A review is the decision on whether this is a function you deliver in-house or externally through another format. And we've, through the restructure and the current LTP, while we didn't deliberately take the decision, effectively underpinning what we put into the LTP is a decision that we will deliver climate change in-house. And while I'm happy for us to look at it again in terms of the fuller context, I don't currently see any reason why we would seek to step away from our climate change responsibilities and hand it to a CCO or some other method of doing it. I think Council has been very clear in the workshops and the discussions we've had that this is a primary function of Council, and therefore one that will be delivered in-house by the Council itself, as opposed to through some other methodology. So it is about what the core purpose of the 17A review is as well. Chair, just while I'm talking, I mean, the one thing that I would note as well is the dates in the final column. Those are the dates by when we have to do the review again from a legislative perspective. I suspect what we will find is that a number of those dates will have to occur earlier. So, for example, biosecurity, once the NPS is delivered later this year or early next year, it might be appropriate to bring that one forward. And likewise, the RMA reform, having a think and look at that well before the 2028 date, I would suspect is likely to happen, given that reform package as it comes through, and we understand that, and the ongoing debate around alternative delivery models for RMA through joint, nationally based platforms for the sector as a whole, as opposed to just each council doing its own thing. So, just so that the council is aware, these dates are the final dates by when they have to occur from a legislative perspective. But my expectation is that we will do a number of these well before those dates.
Right. Okay, so initially you said, if I'm correct in hearing that, because climate change is something we're going to do internally, it's not necessarily needed to be included in a 17A?
Yeah, Chair, I mean, I was just pointing out that while we've not done a climate change 17A review, because we haven't really delivered climate change at any scale in the past, this LTP that we've just completed effectively has a number of the types of decisions that you would have made in a 17A review embedded in the LTP. And for the moment, I don't see any reason why council is likely to change its mind, because it actually applied its mind to it through the LTP process as opposed to a 17A review process.
Yeah. So are you happy that it's not included then, Amy?
Yeah, I am happy. And sorry, look, that's just me not really understanding the value of the 17A review, but the explanation helps. And Joss has just sent a link to the actual legislation, so I'll have a bit of a read, but that answer makes sense. So I'm comfortable that we leave it for now, and we can always, if we need to, bring it in, but that's all good. Thank you.
Okay, so there is no action out of that then. All right. Any further comments, questions? Rick, did you have one?
No, I'm just want to move the next article on maritime, Penny, that's all.
Oh, yep. So we'll, so did I move and second the recommendation, Judy? Or did we? Of 5.3? I did, thinking it was something else, perhaps, maritime one.
Yes, I think you did. I seconded it.
Yeah, I moved it, yeah.
Okay.
Yeah, I seconded it, I think.
So you're happy
Yep.
with 5.3 that Joss moves, Rick second? Yep. All those, anyone not in favour of accepting the recommendation? Carried. Okay, now we can go to the system, maritime safety management. 5.
Excuse me, Penny, sorry, Penny, Peter here. If there was nothing else of relevance to us as auditor, I might dial off if that was okay, or were there other aspects of the agenda that you needed me to be here for?
Not from my perspective. Staff, Bruce?
No, thank you.
Oh, good. Okay, good. Enjoy your day, Peter, and thank you once again.
Thank you, everyone. Goodbye.
Thank you. See you later.
5.4, we've got 3 recommendations here. Rick, you wanted to move?
Yes, please.
Second to Amy, thank you. Anyone speaking to this? Is Jim? I see you're on.
I could start, Chair.
Okay.
And then if you need to know more detail, Jim can fill in. But basically, we're reporting this because our New Zealand Port and Harbour Marine Safety Code compliant safety management systems for Whangarei and Bay of Islands are coming up for their formal review. And as part of the evidence base for showing that we do indeed have code consistent safety management systems, we have to basically show and have evidence that there's an good understanding of the council's risks and the safety management systems in place to manage them at a governance level, hence reporting to you as the Audit and Risk Committee. And you'll see in the paper we've shown where the link is to the council's risk management system. So the council has responsibilities primarily from the Maritime Transport Act for maritime safety and ensuring maritime safety. And as Jim's put in the report, while that's not very tightly defined in the legislation, there's quite a bit of background and history to this. And nationally, the standard to which risk safety management systems are measured against is the New Zealand Port and Harbour Marine Safety Code. And the council has supported having code consistent safety management systems since the code, since the first version of the code in 2004. So as Jim's pointed out in the paper, these are active safety systems, and the risk profiles do change and are changing currently. And he's given the sort of the examples there of currently we're not having cruise ships coming into the Bay of Islands, so that's a reduced risk, but in all likelihood that will come back in some form. There's a change in the risk profile of ships with the refinery moving from being a refinery to a terminal, and the types and size and numbers of ship movements will change. There's also more and larger container vessels coming to Northport. And then there'll be some risk changes around how all that affects North Tugs, who provide the tugs and pilotage services. So those are all actively changing risks that need to be managed. And to do that, we have the co-compliant safety management systems. And then in terms of implementing those systems, Jim, as the Harbour Master, chairs the Whangarei Safety Management System stakeholder group, which does the active risk assessment and management. So basically, we're recommending that you as a committee recommends to the council that we continue to have co-compliant safety management systems, and that's formally documented. So really open to any questions on it now. Thank you.
Okay, so as a committee, we approve this, and it doesn't have to go to full council, does it? Or does it?
I think so what we're asking is that, and I think this is how it's supposed to go, that the Audit and Risk Committee recommends to the council that the council continues to have code compliant safety management systems.
Okay, so it does have to go to council meeting. Is that correct?
From this, I understand that. Is that right, Malcolm and Bruce, that the committee has to recommend that the council resolves? Or?
I think that would be correct, Tony, because ultimately it's a council decision. So it's about achieving the support of this committee at the council table.
Yeah. Yeah, so that's was my interpretation of that number 3. It's a little bit there, but if we cleared that up, that's good. Jim, did you have any further comments? Welcome, by the way.
Mute off, Jim.
And then we'll go to Rick and Stuart and Joss. And okay, we'll do the whole round. Okay, we'll go to you first, Rick. I think Jim might be having.
Well, I was just commenting that as there are 5 councillors on the subcommittee, that I would obviously it has to go to full council, but I would, if we all support it, then I would expect it to have no objection at full council, or it should have been sorted out before then. So, okay. Thank you.
Except there's only 4 of us today, but yeah.
Oh, okay. And thank you for the explanation, Tony. It's excellent.
Yeah, makes sense. Joss, well, to me anyway.
Thanks, Tony. Yeah, it's good to see it set out in the way that it is, using our new risk register in the process, because it works really well. My question is actually directed at you, Jim. It's around your thoughts in terms of the implications with North Tugs and the funding that is likely to be disappearing for North Tugs, so the impact in terms of the risk in Whangarei Harbour, which I'm assuming is decreasing with the number of bulk crude imports going down. But just a bit of commentary from you around that whole kind of situation in Whangarei Harbour with the North Tugs and the change to the refinery would be quite interesting. Jim?
Yeah, thanks, Jossie. It is a bit basically up in the air and in flux at the moment. Nobody's definitely sure what's going to happen in terms of overall numbers and with North Tugs. They used to have a 5-year contract, North Tugs, with Coal, who managed all the refinery business, and then Northport was basically subsidiary off that in terms of using their services. But that's now changing, where Northport's now going to be the main users of the port services and the tugs and the pilots, and the refineries, reducing the future of coal's actually up in the air. So North Tugs are on a year-by-year contract now. So they really don't know what's going to happen to them, whether their contract will be renewed or whether it will cease, which makes it difficult for them to invest. So I don't think that period won't go on for too long. I think something's going to sort of have to happen one way or other. It's complicated further, obviously, by the fact that North Tugs is part owned by Ports of Auckland and part owned by Northport. So there's a whole load of sort of financial and politics involved in there as well. But the end game is that Northport's business is improving and increasing, albeit that the refinery is dropping off. So there'll still be a need for tugs and pilots there. And I'm guessing it'll be a bit of a sort of corporate battle as to where it all ends up. But certainly this next 12 months will be interesting from a business point of view.
Thanks, Jim. Amy?
Thank you. Just a question for you, Jim. Just, while it's complex engaging with those 4 main facilities in the Whangarei Harbour, I guess there's a structure to the way that they operate, which means we can ensure that they have the right systems and processes for their safety, and you can have direct conversations and review those systems that they have in place. So I guess I'm just curious how we are understanding the risk profile, which I assume is growing from the recreational boating sector, and how we are sort of managing that. And I guess just an insight from you about that and how that interacts with the larger players in the harbour.
Okay, yeah, so there is obviously a little bit of crossover there in the main channel between recreational and commercial shipping. That's over the last few years, we have a sort of campaign system around providing advice for boats around not anchoring in the channel and keeping clear, which has been reasonably successful. It still happens, of course, but there always will be interactions. And then we have a whole separate recreational boating campaign for safety, which is tied in with Maritime New Zealand's funding, which this year we've got around $80,000 worth of funding for recreational boating safety. So there's sort of 2 streams to it, but it's an ongoing sort of issue that won't ever go away. There's always going to be a bit of water with lots of ships moving in and out, as with any port. So yeah, it's always a risk, but the risk hasn't really changed. That risk will remain the same. We had a period last year where the biggest risk we had was kayakers actually going backwards and forwards from the heads to the refinery. But that's actually dropped off now. The refinery's laid off sort of several hundred people, but we had to have quite an active word with quite a few people there around that. And they were refinery employees. So.
Cool, thank you.
Stuart, I see you've got your mic off. Did you have a question?
Yeah, just a very quick question for Tony and Jim. Just in terms of NRC's position around the risks, which is fairly multifaceted risk. But is there any independent assessment being made around the recent Ports of Auckland health and safety failures in relation to what that might mean, or if there's any improvement to the system? Is there any assessment going on around that at the moment?
Yeah, so every time there's an incident, we obviously look at our system. So in terms of that particular pilot boat incident, to give you an example, we looked at the operations of North Tugs and found that they were actually at one point in the channel, because the channel does go quite close to land as they're going out. So we've checked, and they've actually amended their passage plan now according to that. But, albeit it's quite a sort of rugged bit of coast down the bottom of the harbour. But that's the way those sort of systems work. We take any incident that happens around the country. Another one would be the cruise liner that broke off the bollards at Timaru in heavy winds. So they had all the around New Zealand, really. Everyone was checking their bollards madly in the ports to check that they were actually secure. So, but the deputy harbour master that we've got that recently contracted down there, Bruce, that's doing a lot of good work for us at the moment. We're at the moment reviewing all the operations manuals, and he was a quite sort of senior experienced marine consultant, so sort of using a lot of his experience at the moment to improve the systems down there.
Yeah, I was thinking also just in terms of with Auckland and the Port of Auckland, in terms of the port operating company and its similarity to Northport, and the similarity of council being a shareholder.
Okay.
And in relation to, I mean, what we're seeing there is a pretty public process occurring with the chief executive actually being taken to court.
Yeah, there's been a long-standing sort of battle between the chief of Ports of Auckland and the unions down there, and I think that sort of battle's played out over the years. But a lot of the issues in Ports of Auckland are around the containerisation, as I understand it. I mean, I'm not an expert on Ports of Auckland, but as I see it, they've had a lot of issues around the containerisation, which is a massive sort of infrastructure issue, and trying to introduce new systems and laying off staff and that side of things, whereas Northport's are very much more of a bulk port at the moment still. We're still mainly logs. They're just breaking into containers, but at the moment the majority of their stuff's logs and sawdust and the odd milk barrel.
So, Chair, I can add to that if you. So, in terms of the national risk and safety management system under the national code, whenever there's a major incident, so a Transport Accident Investigation Commission report on an incident, or major reports like the reports on the Ports of Auckland safety regime, the code has a national implementation working group, which up until about a month ago I used to chair, and a steering group, and those reports are actively considered by the working group and the steering group, and then the main findings for that inputted into the whole review system. So when we come up to doing the peer reviews of the safety management systems for individual ports and harbours, so like the Whangarei one's coming up, and we've just done the Napier one, the safety management systems that for those ports and harbours are checked against the main learnings or recommendations from those reports. And so the big report on Ports of Auckland and key recommendations and learnings will be in the things that the other systems are checked against. So it's pretty active in that regard.
Good collaboration, isn't there? Danny, you've got your hand up.
Yes, Chair, just probably a couple of things and a question for Jim as well. Look, I think it's really good insight for particularly the subcommittee, but I think council has to have greater visibility around the risks associated with the system. This is actually a big issue, I think, for Northland, in terms of there's going to be an increase in international import-export, but also this pressure on the system in terms of decarbonising, and there's a bigger issues around climate as well as the actual system itself in terms of the safety, because historically, well, within the last couple of 12, 24 months, there's been a reduction in the number of investigations, or at least investigations in particular around port state control and a number of vessels that are coming into the country. So it's probably one of those things that it's good to have visibility. And so thank you to Tony and to Jim for the report. I think there's a lot more behind it, and also understanding the complexity because this is just sort of the front one pager and the detail. There is a lot of bylaw. There's a lot of international regulation and controls that relate to maritime environment. So I think it's a good insight. Probably need greater understanding, particularly around council, in terms of how this will affect or could potentially impact, particularly around it's just having the anniversary of the arena. And so it's one of those things to be aware of. At any given time, there is risk from a vessel either on a reef or there's marine pollution. So it's quite a big issue that probably should be in the back of the mind, if not forefront, because of the risk to the region. And I guess, Jim, a question for you, particularly around what sort of happened with Tauranga and also Ports of Napier around COVID, and any comments or information that you'd like to share perhaps around your concerns with COVID and vessels coming into our port and into the region.
Yeah, thanks for that. I think the COVID thing with the ports seems to be pretty well managed. The shipping kept coming in and out. They put in a regime around testing and personal protection gear for the pilots. There's been a lot going on with the pilots over the last few weeks, actually, around that. They obviously change and update their processes. And they were at one point requesting pilots wear full face masks and goggles, and there was a little bit of sort of backwards and forwards around the fact that pilots sort of need to be able to see where they're going when they're driving the ships and stuff like that. So it is overall sort of quite well managed. I think there's been a big supply problem, but I don't think that's been at the port end. It's been sort of the moving the goods in and around New Zealand and getting the goods into New Zealand. But the port operations have pretty much carried on. I mean, the last shutdown would be a good example. Nothing changed at the port apart from the fact that the supply of logs ran out. So it's a sort of supply logistics problem rather than an operational problem. But the safety of the operations and the safety of the ships hasn't really been an issue, I don't think, due to COVID. It's just made life slightly more difficult.
And the lack of port state control has been quite rigorously raised by both the councils and the port companies with Maritime New Zealand in terms of our concerns around the risk that poses.
Yeah, we had it was quite a key focus of our Harbour Masters meeting with Maritime New Zealand this year in Wellington around the Port and Harbour port state control, or the very much the reduced ability of Maritime New Zealand to carry out port state control.
Make any headway on that?
We think so. There's got a new director, and she's taken the points on board. So there's lots of promises, but because they've been going backward for several years, it's sort of not something they can turn around overnight. There used to be, like 15 years ago, there was a port state controller in every single port, sometimes 2 or 3, but they've reduced that down to sort of 3 in the country. So it is quite serious.
Is there anything from a governance perspective that we need to do there, Malcolm?
Yeah, so there are different aspects to this. I mean, firstly, from the harbour and health, navigation, health and safety perspective, I think supporting this paper and continuing to support the
Well, you're quite faint, Malcolm.
Sorry, Chair.
Yeah, that's better.
So it is about council supporting the health and safety code that we have in place. I think if I could just comment on Stuart's comments around the analogy with Auckland. From a health and safety perspective, there are some really quite fundamental differences between ourselves and Auckland, in that Auckland is a wholly owned subsidiary of the council. and therefore they have far more direct control and responsibility for as the shareholder and controller of the port under the health and safety legislation. In our case, firstly, we don't actually have shares in the port directly. Our shares in MMH, even although MMH is the port operator, not Northport. So there's some technical nuances there that I'm not sure that we, fully appreciate what the consequences will be from a health and safety perspective, and maybe we should explore that with the MMH directors. But if we were to reach through the MMH structure into the port, we would be attracting a significant amount of health and safety liability that, as I understand it, we don't have at the moment. That would lie with the Northport board and with the MMH board and stop there and not flow through to ourselves. So I think that we do need to be a little bit careful about not attracting liability by becoming involved in issues that currently we have legal separation from.
I'll come to you next, Rick. Jim, did you want to say something there?
Yeah, the other one, just in terms of what you can do, is I think the director said she was going to come round and meet all the chief executives. So she will be meeting Malcolm soon. So it would be a good one to raise about the port and state control inspections.
Okay, thank you. So just going back to some of Danny's other comments about risk. So what Danny was talking about is on our risk register, isn't it? Yeah. And I guess the other point,
the aspects of the port operations and our risk by providing the harbour master services is definitely on our risk.
Yeah, thank you. I thought so. And just the other point that Danny made. So when this does come to full council, maybe it does need to be quite a full report, just so that people are fully aware.
Okay.
Chair, if I can just say that it's probably more the context in that, particularly from Tony and from Jim, understanding the changing nature, because I mean, whether it be a PCBU, has WA, the legislative framework that sits underneath what Jim has to do and what the port does as an operation, I think there's significant risk there, not necessarily just in terms of us in governance, but in terms of the region itself. And I'm not saying, touch wood, that there's going to be arena, but it's just being aware of it.
Text and content. Yeah. Okay. Thank you. So if we could take that away, Rick.
Now, look, I just want to say, Danny, I was on the audit and risk last time, and I did. We had quite a few discussions about ships in the outer harbour, especially. And I won't bring up my pet one, which was I won't bring it up. So anyway, we had a big discussion about that. And I've had quite a few discussions with Jim and Tony regarding the harbour safety as well. So that's why I haven't really been have any questions on this. But I will say, Penny, that if we go to council, I don't necessarily know if a really long report is necessary. I think the main points with perhaps links for people to go to, or enable Tony or Jim to ask questions, because a full report on those issues could be raise a whole number of questions that we probably don't need to answer at council meeting regarding the safety. The fact is that the report's done and it's very good, and I have moved it, and I just have to get going now to get back into council for the property investment. So thanks for that. Thank you.
Thanks, Rick. Yeah, and I think we agreed it was more context rather than content. So yeah,
absolutely.
Thanks.
Thank you.
Okay, so I think we're all done for discussion on this. So have we still got a quorum? We will, with Rick going.
We need 5. How many do we have?
5 people or 5 councillors?
5 councillors and independent members.
Okay, so we've got that. All right, very good. Okay, so all those in favour of those 3 recommendations, or anyone not in favour? You're not in favour, Amy? You are.
Sorry, I am.
Yeah, cool. Okay, so that's passed. So now it is time for us to go into public